Hello everyone, welcome to my new video. Today I'm gonna be explaining the EMA inversion model. It's the way I've been trading lately. I've had several payouts this way, and I want to explain this simple yet powerful model that delivers many setups basically in any asset. I've been trading mostly crypto and NQ, mostly NQ, but I'd say it can work in any asset. So, EMA inversion model, we need three EMAs, 33, 50, and 200. So, price must be below all EMAs for shorts. So we only take positions when we are below the EMA 33, right? So for longs, obviously we are going to make the opposite, but for shorts we need to be below all EMAs, right? So we are going to treat the 33 and 50, these two EMAs, we are going to treat it as a zone, right? So basically we want to see the price below all of them come and touch, and after it touched the zone, we are going to wait for a rejection candle that showed that the sellers stepped in. So instead of waiting for the EMAs and just taking the trade when it touches, because many times it can go to the 200 and then react, or many times it can just completely go the opposite way. So we are not guessing if the EMAs will reject or work. Rather, we are going to wait for a touch and then a rejection, and then what we want to see is an imbalance being inversed, right? So in this case we have a bullish imbalance. Here the price touches the zone, rejects, closes below, right? And when it closes below, and you have a close below that level, that's your trigger to enter. I like to enter as soon as the candle closes and confirms, because look, here in this candle we had like no close. We don't want to see like barely closing, no, we want to be like a good close. That it shouldn't be like a debate around it. You should see a nice close below, and that's your trigger, right? After you have that confirmation, you can open your position. Your stop loss should be at the high, and your take profit is a new low, but me personally, I like to target the candle closing. Many times it does like this and then it starts to mess around, or maybe it comes back. So with the back testing with this model, I'm mostly taking profits at the candle, or you could take easily some partials and then leave a runner maybe. Like, it depends how you want to play it, right? So this model in this case is giving like almost 2-hour trade, but many times you can get the closing way below, but still it's a trade I would take. And most of the times it could be a 1-to-1 trade, and it's okay, right? But I want to see a close below. So after I have my confirmation, I just take the trade and execute. In this case, little pullback, and then boom, take profit, right? So as I said, I like to enter when the candle close. Maybe if you want to see a little pullback into the 50% of the flipped imbalance, that's okay, and you can do it. It depends on your style. In my backtesting, it's rare the cases that I use break even. I just let it ride. So at the end, it's like finding your flow and the way you feel comfortable trading. But many times the micromanaging makes you lose the opportunity to win a trade. You put break even too fast, and all that micromanaging. When you have the right state of mind, is good. But many people are messing around and losing opportunities in that micromanaging. So it's okay sometimes to just take the trade and let it ride, right? So this is the trade I'm mostly using. Another thing that could happen is that when price comes, it doesn't reject here, it touches the EMA 200, and then if I see a touch of the 200 and a aggressive rejection and a close below again the EMA 30, and maybe here we had an imbalance and it was flipped, I would take this position as well with my stop loss here and my TP making a new low, right? So the best setups for me are when the 3350 zone is respected, but then the 200 gives another good probability, because the 200 is like a magnet, especially in the lower time frame, and you will see reactions here as well. But sometimes when it starts closing above here and it touches the 200, the short bias is not the same. For me to be like A+, we need to be below all EMAs. But as I said, I repeat, if I touch 200 and reject with aggressiveness and flip here an imbalance, this could be the play as well, with your stop loss here and your TP here. So basically this is the way I'm using to trade. It has given me really good results. I find quite a lot setups in any asset, crypto and indices mostly, as I said, and it has been working really well. Mostly 1 minute, 2 minute, because I always tend to trade the lower time frame, but you can use the same model in any time frame. As you know, the market is fractal, so anything that repeats in the 1 minute will then repeat in the 5 minute, in the 1 hour, in the daily chart. It's just you as a trader where you want to be, right? But that's how I found like my pace, my rhythm. But as I said, you need to trade the way you are comfortable with. The models are easy. What's hard is the execution and the discipline to stay true to your rules and your model during a long period of time, despite of the outcome. Because any given system can have a losing streak and then a winning streak and then break-even trades, or however you want to play it out. So losses are just the cost of being in the trading business. Losing a trade doesn't mean you are a loser and you are failing. No, losing a trade is just another day, right? And at the end of the month or the year or the decade, you will see how trading and results compound, and you will make the freedom. So it's just about finding an edge, going to backtesting, looking if you have profitable numbers over a large sample of trades, get that confidence, and then just be like a robot and execute. So this is the way I'm trading, and this is the system I'm using. Let's continue and let's see maybe if we have another opportunities. You can take a screenshot here, or I'm gonna leave the rules in the description of the video as well, and let's see. Let's just play out. So at the moment, as you can see, we are clearly bearish. Let's see maybe if we get another opportunity. Here, a touch of the sun, and then what I want to see, a reaction, right? So as you can see, we have an imbalance here. Let's see what happens. So I'm not trying to anticipate the EMAs to work, and that's why EMAs are really powerful, but many people get burned because they just do the first touch. And it's okay as well, like you can make a model out of the first touch as well. I repeat, it's just how you feel more comfortable with, right? So me personally, I feel more comfortable now waiting for a rejection and then maybe get a lower entry with a lower R but higher probability, because you could take it here, but where's your stop loss? But then if I see rejection, price shows me that it wants to continue like in a downtrend. Let's see here, see, closes above, we don't take the trade. This could be a stop loss, but we just waited. If price touches here and rejects with aggressiveness, maybe we can see if we have another opportunity. Nothing here. And then when price is like this, we wait for the EMA like to cross, to flip, and to start an uptrend. So at this moment there's just no trade, and we just wait for a trend to form. When the EMAs are too tight, they start to tighten. It's maybe consolidation or it wants to change, but I don't like this. I want to see like a healthy trend where we have the 200 above and then way lower the two other EMAs. But when they are like this, sorry, when they are like this, we just wait for a clear trend to form. So at this moment, for me, no trade, nothing at all. Here, looking way better, maybe another high. I just want like a good trend to continue like this. Now the EMA shifted. Now it's another deal. Let's see if we get a touch of the zone and maybe a nice position here. Look, here price touched, but no imbalance, no nothing. If here there was an imbalance, you could take a position like a 1-to-1 here, right? Like boom, something like this. But no imbalance, and here is like too tight, looking like consolidation. I'm not taking a trade, but basically it's a reaction. But see, no imbalance, so no trade, we wait. Nice reaction, but we didn't get our confirmations. A new high. Now the EMAs look way better. Maybe we get a trade before market closes. Look here, there's a fair value gap here, an imbalance. Boom, here we get, did we close above? Like barely, but it could be a position because a close is a close, right? But still, I want to see a clean close. When you have many doubt, like it's better maybe to be away, and that's it. Here, stop loss, end of the market, touches the 200. Maybe if you get a 200 and a reaction, you could take another position, but here market is going to close. And the session closes. We could go to the next session. We wait the market to open and form a trend. So here now, as you could see, we have a clear uptrend. We just wait for a touch of the zone. Here we have a touch, and here we have a trade. Look, the price touched and flipped the imbalance. We could take a position buying, stop loss, and take profit. It would be basically a 1-to-1 trade. Take profit, nice trade. You could also, maybe if you want, if price is higher, you could wait for maybe a pullback and take a better position. But I've seen in the backtesting many times that when it confirms, many times it just shoots to the target. So I entered here, but if you wanted maybe a pullback or something like that, you could take it as well. Or maybe if you are going to open 5 micro contracts, you could open 3 contracts here, and then if it goes down, you open the another 2. You could play like that. So we are just following the trend. See? Let's see if we get another opportunity. Look, another touch. Let's see, another imbalance here. It's way better when we don't have, when we had like just one imbalance and we flip it. Because when you are like this and then this one, like it's two imbalance that we have to take out. But if I get a close here, I take the trade. That's how I've been backtesting, and the way I've been trading this model is like the nearest imbalance to the touch. When it gets flipped, we could trade. No flip yet. Here we get a flip, and as I told you, as soon as it closes, you could take the position. your stop loss, your take profit, right? Sometimes it can give you maybe negative R. If you are good and you can take it and you feel comfortable with it, you could take it, no problem at all. Me personally, I take it, but as I told you, you could wait also maybe for a pullback and you will have a better risk to reward. But maybe you can be left without taking the trade. So it depends how you want to play it, but as soon as we have a touch, a rejection, and the flip of the imbalance, you get the position. Now depending of how you want to play it, you get one R or another, you choose. So in this case, I'm just taking it, boom, take profit again. So if you were waiting maybe for a retracement, it wouldn't happen, right? So that's what I'm talking about. That's why I'm aggressive with it, and I don't care. A new high, so we get another chance, another opportunity if we get another touch. Again, same shit. Look here, did we get a close? Sorry, we did get a close, barely. Like, you can take it, but in reality it closed. Let's see, I'm just gonna take it, stop loss at the low, take profit at the high. So you will see that the risk of the reward can be different. So the last one was like 0.93, here is a 1.3. You could have, if you wait for the pullback, maybe you could go for a 2R like this. You just play it the way you feel comfortable with. Taken out. Some people could go break even here, but many times, like here, if we went break even here, we would miss this one. It is what it is. Just take your trade and that's it. It's just business. The way I recommend, you could have 2 shots per day, and that's it. You take 1 shot. If you win, you can call it a day. Maybe you can take the second one. It depends how you want to play it, but 1 win, you can call it a day. And then you can take 2 trades, risking 0.5 R each and risk 1 R per day, and you have 2 shots. And most of the days on NQ, that when it's trending, you will find opportunities. So here we get closes below. When you start to see closes below, most likely, and even more in the lower time frames that we are trading, price will touch the EMA 200. See, so we were really bullish here. The EMA is protecting. As soon as when it closes, look, boom, it touches the 200. If you get a clean reaction, maybe you can look for opportunity, but look, the EMAs are just starting to tighten, and then price is consolidating. Here I'm not doing anything unless I get a nice new high, or in this case, look, the price just flipped. So we are just following the trend. So we get a trade here, we get a trade here. Here unfortunately we didn't get the trade because we didn't have an imbalance. But yeah, sorry, here, yeah. So here the trend just flipped. So now I'm short. I'm looking for a short. Let's see when we get a touch of the sun. Here we got a touch, but no imbalance. Looks like consolidation. Let's see if we get another chance. This one could look good. Here we have the imbalance. Let's see what happens. Boom, it's flipped. Rejection, and the imbalance is flipped. You could sell here, looking for this candle close, and your stop loss here, or you could maybe use the EMA, but I most of the times just go for the high, right? So the risk to reward of this trade, it's better, see? So it can give us different R's, and we are just following the trend. Let's see the result here. Boom, take profit, nice trade. Let's see, new low, and we just wait. We just wait for a touch. Here, touch, imbalance, and also we have an imbalance here, like all of this zone. Let's see, it didn't close. Boom, here it's a confirmation as well. You could take this trade as well. If you take the trade here, it's a 0.73R, but in this case maybe you can do it like this, or maybe even like this, and just go for a 2R. Maybe let's try maybe with a limit order. You could place your trade, right, and just wait to see maybe if you are tagged. So look, in this time you missed your trade. That's why I'm telling that I prefer to enter like this, but this trade would give you 0.75R. If you are okay taking it, cool. Or maybe you put your TP at the wick, you just play it. But see, we are not trying to guess anything or looking for complex things. It's just a really basic concept of following the EMAs and waiting for a reaction. And then when you get the reaction, you engage and you take the trade. Let's do the last day to see if we get another opportunities. Let's see, look here, price, nothing. You just wait for the open and a nice trend to form. Here it starts to form, but nothing yet. Let's see, maybe here now, look. So look at the difference of this with this. It starts to look like a trend now, and let's see if we get an opportunity. We get a touch, right? Maybe we get an imbalance there. There's no imbalance. It immediately flipped. I'm not taking this one. It was kind of TP, but I don't like that kind of setup. Let's see here. Mostly consolidation. Let's see. Price is too tight. When the EMAs start to put tight like that, we don't do nothing, we just wait. Look, here it looks better, new high, and the EMAs looks better now. We wait for an opportunity, a touch, but we don't have any imbalance, right? Maybe you could go to the 2 minutes. If you are trading the 2 minutes, we have a 2-minute imbalance right over here, but we are not touching the EMA. So I think that we should stay like in the same time frame, because then if you say like, oh, a 2-minute imbalance but a 1-minute EMA, I like to stay like in the same time frame. So in this case, there's nothing for me, no trade. Again, it starts to close below, sorry. So maybe the EMA 200 will be touched here, see? So the EMAs are protecting. When it starts to close below, boom, EMA 200. Now the trends look like it starts to shift and the day is over. Let's do one last day. We wait for the trend to start. Here we have a nice uptrend already. Let's see if we get a touch of the EMA. Here we have an imbalance, a little one. Let's see. we get a close, we could buy our stop loss, our take profit. This is a 1.4 hour trade. We are out, and then some sort of consolidation, and then TP, and that's it. And many trades can go to stop loss, and that's just the cost of doing business. So you won't freak out because you lost a trade, because you come from other trades that have been giving you TPs, right? So it's just about having patience and just trading when you have good setups. On NQ it has worked so well, I really like it. And again, see, it starts to close below EMA 200, and then maybe a flip in the trend. So it's just about patience. I talk a lot about patience and risk management and discipline on my X, because without it there's nothing. 99% of people just focus all their trading journey in jumping from system to system, trying to avoid failures. And spoiler alert, that will never happen. Losing a trade is just the cost of running your trading company. Just like if you have a restaurant and you need to pay your rent, and you need to pay a mortgage, you name it. So it's just the cost of doing business. A stop loss is not a failure, it's just a dot in a huge data set. So don't judge yourself for the outcome of one trade, rather the outcome of 100 trades. If you stay disciplined, if you follow rules, and you risk small and start to build your confidence and your momentum, your completely life will change. So write the rules down of this model and give it 90 days of pure discipline, doing the playbook I just told you, and taking your trades. It's a really simple and straightforward model, but it can give so many opportunities. So yeah, that's basically what I wanted to talk about and the way I've been using it. Look, this could be an example here as well. The EMAs got better. It dips to the 200 and comes above and closes. When it closes, it can signal a continuation, right? So just to resume it, the best trades will be above this zone. And there are some trades that when the trend is healthy and it touches the 200 fast and come right above, we like it. Sorry. So basically that's it. Plain model, simple model, very straightforward in any time frame. Go back test it, find your confidence, write the rules, and lock in for 90 days. You can literally change your life. You are closer than you think. You are just 90 days of discipline to start rewiring your brain, because your brain is wired for survival. Uncertainty, it's danger, discomfort. Your brain doesn't like that. If you do 90 days following the same rules with a healthy habit, you will rewire everything and you will feel comfortable in uncertainty. So profitability can be achieved. You just need to be born again, basically. You need to unlearn and relearn. So it's you versus you, and you got this. So thanks for joining. I'm gonna do some more videos soon. It was a while since I uploaded my last video, but I want to log in again with all of you and start being more active in the Discord and trading with all of you. So thanks for joining, and we will see in the next time. Bye bye.